I had some questions on the YouTube channel. I didn't improve them. I just read them. But they asked about lower time frame trading chart patterns, like the hourly, the 4 hour chart, which is not really low, but most of them asked, if they could trade the hourly chart. Now understand that chart patterns work best when they occur over a long period of time. There are some chart pattern traders who trade the dailies, weeklies, and sometimes they'll look for like a 13-week pattern before they'll even consider trading it. So keep that in mind when you're thinking about lower time frame patterns, because if you think about it, there's so many ups and downs and sideways on these shorter time frames that get hidden with the higher time frames. So, and because chart patterns can be subjective when you're looking for them, you certainly want to make sure that what you're looking at is an actual chart pattern and not just an animal in the clouds, so to speak. But we'll take a look at them, and that's one thing about Forex Trendy is it does keep you objective because it's not you that's actually finding them, and that's really important when you can make things more objective as opposed to subjective. And that's one great thing about this. So let's take a look at a recent trade. Now I just clicked all of the patterns. I clicked all of the currency pairs, so I'm not hiding anything. And I've gone for the hourly charts, okay? So this is the pound US, and it was a signal to sell, obviously, at 1.2659 on the 20th of June, which was the day before I made this video. Haven't had my coffee yet. So anyhow, we have a sell at 2659, which is right here. You can see it right here. Let me just draw that in here. I know you can see it, but right there. And you'd sell the break of that. How you'd get in, entirely up to you. Maybe you've set an alert and Forex Trendy's emailed you and said, look, we have a break here. Maybe you've dropped down to even a lower time frame, which is fine for your entry. Because what you could find inside these candles, the hourly chart, remember we're looking at an hourly, right? Maybe on the 5-minute chart, you found where it was going sideways for a little while. Okay, it was basing, and then you sell stop that. Okay, now the ultimate target on this was way down here at 1.233, so we didn't even get close to that, but we got down to basically, let's just say 2588, which is just shy of our second target here, right? The Fibonacci targets are the way they're using him, so that's not a bad trade if you think about it. 2659 to 25, let's just say 2590, right? That's not a bad trade for a 1 hour chart, right? It's about 70 pips. So you can see, on the shorter time frames, you just got to make sure that you, when you get the alert, get to your computer. Euro US dollar, let's see what it had here as a flag pattern. You see the touches here, how they started to draw it. It was a break. This on the 19th at 11:55 was the break. So right here, obviously. You can see what happened. It just kind of chopped around for a little bit sideways. But this is actually, you see this a lot, right? If you think about trend lines, when they break, you get the retest. That's kind of what happened here. Whether you obviously didn't know it was going to do that. We never know anything. We just trade what we see, right? What happens. So the breaks here, we fall down and we get down to, looks like 1120 is the low on this. And let's see what we got. 1109. So let's just say, well, we didn't make it. We've got the first target, which we certainly did. So let's go 1120. So we got 1155, 1120. Not a huge trade, right? But again, remember what we're trading. We're trading the hourly. If you're trading hourly charts, you're probably more into day trading anyhow. And it's not, trading Forex is not like trading futures where the overnight margins are higher, right? You're going to have some costs involved depending on your trading currency that you're using. But holding Forex trades, spot market, these kind, are a lot better than holding over the futures. Let's look at the CHF JPY. This is ugly. See, this didn't work out. It was a sell at 11346. Breaks down here. Well, where's the break? I don't even know where the break is on this. Back on the 12th. Where am I looking? Oh, it's way over here. So let's find it. On the 12th, Oh, here we go. You could, well, you know what? This is interesting, right? This is where your trade management's really going to come into play. So you had the trade break here. Where's your stop? Well, where are you going to put your stops, right? Remember, tight stops, people think, oh, I need a tight stop, I get a bigger position size. It doesn't matter. Risk percentage is risk percentage, right? You want to keep your stop out of the noise, absolutely. Like just putting in here, well, these are targets, right? These are targets for price in these congestion areas. Price comes up, these are targets. So these kind of things will actually attract price to them. Why? Base, drop, right? See the consolidation, a big strong breakout. What does that mean, right? People are looking to sell in this area. There's also some people who are selling these areas. What is just beyond here, right? What's up in here? Order flows up in here. Because what's up here? Stops. So you can look at a few ways of doing it. You can actually say, okay, you know what? I'm going to use ATR as my method of stop. People can do that. You can say, okay, well, where do I know this trade is invalidated? Well, we would know. Here's the break of it. If it trades back inside, is it invalidated? Absolutely not. Up in here, breaks above here, it certainly is invalidated, isn't it? Now people are going to be going, well, you don't know risk to reward ratios. Well, you know what? Risk to reward ratios are a guideline. You're never guaranteed the reward, ever. You can, for Forex, for the most part, because you're not really trading the real market, you're trading the broker market, you're almost guaranteed you're going to get the stop that you've put into your system. In futures, you're looking at slippage, commodities, skid, right? Same sort of idea. So, or you could just say, you know what? Let's just use technical analysis. I'll draw. That's not a trend line at all, is it? Let's just go here. Let me find it. You could say, okay, well, I will do this. I will go down like this. Same sort of idea. Obviously, this isn't here yet. Sorry. If it breaks above this, right? We already have that. If it breaks above this trend line I've drawn, because here's my 1, right? And here's my, I can't draw with that, but here's my second peak, right? So I can draw my trend line. So if it breaks above that, you're out. Well, if you did that, well, price dropped down to 11250. 11250 is right in the second target, right? 11346 took some heat, right? That's where a lot of traders are afraid, so they get out. And if you did that, you miss this, right? So let's just go from 11350, for example, 11350 down to here. So it's almost a 100 pip trade. That's pretty good. If we look at our 4-hour chart, I was going to quickly just grab the first one. Same idea. It's a triangle. We have a break to the upside. Break is at 84.44. Got some juice on it to 85.08. We didn't quite get the second target, but we got the first target, right? So you could make your own plan here saying, if I get to my first target, I'm going to reduce risk. I'm going to scale out something. So even though this trade comes right back inside, you had an opportunity to make a little bit of profit. All right, one more. Euro CHF. It was a break at 108.53 in this area here. It gets up, double top, 0907. Doesn't really get anything, does it? But still, chart trading. What do you see here? Price moves up, pulls back. Natural, right? Especially after you get such a momentum move like this big candle here, this big green candle. You're going to get the pullback. Look at the pullback. That pullback is not like this big red candle. That's a strong pullback. These are weak pullbacks. This is what you would expect on a break, right? The problem is you put in a double top right there. Once you see this happening, you should be getting out of this trade or at least tightening your stop up. You get this big red candle here. Well, you should be out of that trade when you see that. And you would have banked a little bit of profit depending on when you got in on this trade. Because again, it's a 4-hour chart. When you got the signal, the SMS signal or the email, you might have gone down to a lower time frame. You might have looked for some basing pattern like this. You might have said, okay, I'm going to buy stop when it breaks out of here. Momentum takes you forward, puts you in a profit. This big red candle comes out. After a double top formation, you're like, enough. Take out some profit. So you can see that it did okay, right? Even though these are short time frames, you're still getting enough push to at least lock something in, reduce your risk. If you're risking 2%, maybe you've taken some risk off. Now you're only risking 1%. That's not bad. Trading's all about that, right? Risk control, risk management, trade management, account management, overall exposure. You get that right, you can have a system that has a low win rate, and you can still do very, very well. Last trade, Euro Japanese yen. We had a breakout. Oh, this is way back in May. I'll just finish it off here. Where we go? 13, right? So in this area here, it breaks up. How we get high? We got high to 125.92. We didn't quite get here. We got our first target. Again, we got our first target. What can we do? Reduce risk, take some profit off, put it in the bank. Look what happens. Price comes down strong, right? On that red candle, strong. And the reason I drew this red line here, I don't know, does this make it bigger? No. If you look right here, you can see this, we rallied up, came down, we have a tail here, right? A shadow, and price breaks above that. So on a lower time frame, this obviously is a daily. If I look down lower, you're going to see an obvious swing low here. Price breaks above, comes right back down to test it. Still not bad, right? It's holding. When you get this tail come in, right? That's actually another trade if you're a pure price action trader. But look what happens. Double top formation, right? We are no longer making higher highs, higher lows. And we've got a big triangle here, this whole mess. If you start looking what's happening in here, what are you getting there? Another one, right? So when you start seeing this kind of stuff happen, especially after a double top formation, you might have done something, get out. Now it's got 124.39. Still a good trade, right? Over 200 pips. So, anyways, I was hoping to keep this short. But this is Forex Trendy. I got no problem with it. And, chart patterns, they've withstood the test of time. They certainly have. The only caveat, the only thing I would say to a trader that likes these is to make sure that when you're getting these breakouts out of patterns, be very careful of horizontal support and resistance areas, okay? Because a lot of time, well, that's what's happening right here, right? Price is chopping around here. This will give you the idea that we're going to break up, but you're going to have, at these swing levels, right? You're going to have support and resistance areas, potentially. But the good thing about this is this. What happens at support and resistance, right? Price either breaks through or it fades, right? Depending on what's above, right? Because price does, what's it seek, right? It seeks flow. So if we look at this trade here, for example, we'll just use this one. You're in this price move and you've already banked some profit and cut risk. If you're a pure horizontal and support trader, you look at here, there's a breakout, and you can't see it too well because it's a daily chart. This green candle here, we have some push up, some basing just below support, resistance, and that is a bullish thing. That's bullish. We get a nice push up, right? People pile in, boom, price slams against them. They try again, right? So you can get these traders here helping your trade along, putting you into profit. And then when they get in the trade, well, they have to deal with all this mess where you're already scaling out part of your profit. You're reducing risk. You see what I'm saying? Play that game. Sign up below. Let me know you did, and I'll keep these videos coming because apparently everyone likes these. Thanks.